Everybody's trying to build the next SaaS tool. However, no one's actually building the company that's going to provide services to where all this AI money is going. And that is precisely why there's such a big opportunity and what I'm about to tell you. And so in this video, I'm going to break down the 6 layers to the AI economy. You'll discover the nearly $1 trillion infrastructure gold mine and the 4 strategies you can use right now to profit from all of this. And ultimately why this AI bubble is completely different from any other bubble in human history. So let's start off with the AI economy pyramid. So these are the 6 AI layers of the AI economy. We have tier 1 to tier 5. The lower the tier, the more blue ocean. Obviously, the higher the tier, more red ocean. The bottom 3 tiers, energy, chips, and data centers, are the often overlooked and unshakable foundation of the AI economy, kind of the backbone. This is where predictable, massive cash flows live. They are get rich reliably opportunities. All right, so we have tier 0 to 2, which is the infrastructure goldmine. I need you to understand that AI runs on watts. So the energy empire, you can coin it. Now, AI's insatiable hunger for data means data centers will soon gobble more electricity than entire nations. We have kind of 2 bottlenecks. We have energy and we have data, and we don't have really enough of both. And so we are building data centers, but those data centers need kind of the gasoline to power the vehicle. And so the gasoline in this is electricity. So we're going to have utilities and grid services, which is going to be super important. More importantly, though, we're going to have critical backup power systems because these systems cannot fail. And if they do, we're going to have very big issues. And then we need specialized contractors servicing these energy needs. And so if you're kind of thinking, how do I make money? This is a perfect, less risky play, because if you want to make money, you just have to follow the energy demand. And trust me, there's a ton of demand in this sector with little supply. And then next we have beyond the silicon, which is just manufacturing the actual brain of AI. So everyone talks about NVIDIA, but the true gold mine, it's the unseen world of semiconductor fabs. So the colossal factories that birth AI brains. These facilities demand highly specialized human-led services that simply cannot be automated. This is where the trickiness comes into play. That's why you need such specialization in this field. So if you have precision HVAC systems, if you have ultra clean room maintenance, and complex equipment servicing, this is where the future of AI is physically built. And so if you have a business currently, or you are in a blue collar field, an easy play would just be rebranding into the AI field, because really the systems probably aren't that different. However, the positioning is massively different, and there's so much huge upside to positioning yourself in one of these sectors. And then next, obviously, we have the data centers. And so just some facts here, $455 billion was spent last year. This is up a staggering 51% year over year. So harsh truth is that hyperscalers like AWS and Google simply cannot operate without a vast network of local service providers keeping things running. So in this kind of sector, we have critical cleaning inspection, we have essential plumbing and fire systems, and we have complex cable insulation. And here's kind of the pro tip. Think of it this way. Start with cleaning. We're just going to come and clean and provide maintenance. And then suddenly you're going to pivot into risk management. And that's where the real money is made. Like I said before, once these systems turn on, you do not want these systems turning off. So let's kind of just say, forget the hype for right now. So the secret edge in all of this AI industry is everyone wants to build the next ChatGPT, but almost nobody wants to run the company that cleans data centers or installs backup generators. You can even see it from everyone. They want to build apps and all this other stuff, which is great and all, and there's money to be made there, do not get me wrong. And kind of the key takeaway with these type of operations is that there's no hype, there's no crippling VC pressure, there's no existential competition from big tech. Instead, they generate cash flow, which everyone wants, and ultimately is very predictable. And that is how you're going to mitigate the effects of AI. Like I said before in previous videos, we're going to see a flipping of blue collar and white collar work. This type of work will become very, very specialized and highly sought after. And so when you're kind of mapping all this out, it's super important to understand where genuine value is created and where dreams and capital often kind of go to die. So let's start with tier 3 first, foundation models. Building GPT scale models demands hundreds of millions in GPU costs, complex, circular financing, largely among big tech. Between me and you, if we want to go build something like this, it's not really in the cards because, again, we don't have the financing, we don't have the money, and obviously we do not have the runway to continue doing this type of project. In other words, Don't build the oil rig, you just sell essential services to the giants who do. Tier number 4, the AI orchestration. This is the critical plumbing layer. So APIs, robust deployment platforms, and precise monitoring tools. Think Databricks or managed AI services. And think of AWS, right? It's not flashy, but it's a cash printing machine. The same logic applies here. If you own the infrastructure that connects models and applications, you capture immense value no matter which AI model ultimately wins. So as you can see, there's less risk here because you're not betting on a sole company to win the AI race. Rather, you're providing basically the infrastructure so that they can actually win the race. Tier 5, applications. As we can see, applications are easy to launch. Anyone using Anti-Gravity or Claude Code kind of knows this, but impossibly hard to scale, especially as everyone's starting to develop their own SaaS. Here's the harsh truth. Big tech doesn't just steal ideas, they steal talent. And if you're starting off on a small team or have a few engineers, it's going to be very difficult to compete with these big tech companies because they're just trying to steal everybody. So right now, your team's kind of your moat, but they're being consistently recruited away to these bigger companies. A pro tip, some critical insight here. The closer you get to the consumer, the more competition you face. And that leads us to the big elephant in the room. Are we in a bubble or boom? We've seen this before. Over $400 billion in AI infrastructure spending in just 1 year alone. Think about that. That's absolutely insane. Like I've always said, the numbers being thrown in this industry, being thrown into these companies, the data centers, have never been heard of before in history. Roughly 40% of the S&P 500 gains are directly fueled by AI stocks. The concentration risk is undeniable. A mere handful of companies are dictating the entire market's trajectory at this point, right? Imagine that. Imagine there's a house of cards and there's a few pillars holding it entirely up. That's kind of what we're looking at right now. Similarly, today's AI infrastructure, spending isn't just hot air, it's building actual real tangible assets. Colossal data centers, upgraded power grids, cutting-edge chip fabrication plants. And here's the good news. Even if valuations tumble, this foundational infrastructure will remain. Like, it's just not gonna go away. This is tangible physical stuff. It's just not disappearing. The verdict, it's probably a bubble, but does it really matter? Probably not. And so, I mean, the real question isn't whether you should participate, but where and how you choose to make your move is the ultimate question you should be asking yourself in this new AI era. And leading us to 4 strategies to profit. So unleash AI for pure profit. Boost your margins. So forget AI just as a business model for right now. Think of it as your ultimate tool for margin expansion. If you have contracting margins, like a lot of businesses do, deploy AI internally to automate customer service, streamline SOPs, and turbocharge lead qualification. Result, dramatically lower operating costs, and you'll see more profit. And then we have kind of be a workflow wizard, fix real problems, right? So with Anti-Gravity, with Claude Code, with all of kind of this AI tool infrastructure we can use, stop building grand ideas and just start fixing specific workflows for businesses. And so ultimately just focus on high value, time sensitive domains like legal, accounting, operations, and compliance. And then ultimately own the future. Don't just wait and watch. Most importantly, try these tools, obviously, but here's the harsh truth. By the time an opportunity feels safe, it's already too late. And so ultimately the bottleneck isn't AI. AI eventually is going to get there. As we can already see with these tools, the bottleneck, it's humans. And the numbers speak for themselves. As we can see, most companies haven't deployed any AI in a meaningful way. Among the companies that have, a shocking percentage spend more time fixing AI mistakes than actually creating real value. And the next big leap is agentic AI. It's going to be a complete paradigm shift. Agentic AI systems can plan, execute, and make decisions autonomously, as we can see with Anti-Gravity or even Claude Code. It's poised to completely reshape how businesses operate. And so the early adopters of agentic systems won't just gain a competitive advantage, they will be operating in an entirely different league. So how do we build unshakable value? Number 1, forget the hype, focus on fundamentals. Number 2, chase cash flow. Let AI amplify your business. Work smarter, not harder. And use the best tools available to make your existing business more profitable. As always, my friends, see you later.